Good day, everyone. Welcome to another edition of Friar Financial's Financial Forum. On today's show, we got three things that are battling each other: inflation versus geopolitics versus AI optimism. We'll ponder the question in Finance in Focus: does diversification still exist? And we'll talk about today in our Wealth Wisdom Workshop managing an inheritance going into retirement and how you can leverage that. So stay tuned, and we'll be right back with Markets in Motion. All right, everyone. So we are back with Markets in Motion today, and Jeffrey's going to start us off with some of the key moves that we saw in the market this week.
Yep. So some good things happening in the markets this week. Weekly performance increases all around. So the S&P 500 was up a little over half a percentage, so 0.65%. The Nasdaq Composite was up 0.7%, and then the Dow Jones Industrial Average was up 0.66%, as well as the international developed markets that was up 0.92%, so almost a percentage uppage in that. And then a lot of that came from the easing inflation concerns along with the Middle East, diplomacy optimism, as we kind of seen in the news this week, and then some record IPO enthusiasm as well as kind of up some of those markets. So some big things driving the performance in the market this week. And that kind of goes as we dive deeper into that. The market drivers are war, peace, and space. Those are the three big things that we've been seeing this week. Monday, chip stocks leadership. The S&P, Nasdaq went up as I said, and Dow kind of lagged behind. But then we got a little bit of uppage in that. On Tuesday, the sector rotation away from semis, and then we saw the Dow up there, and then the S&P, Nasdaq kind of drop a little bit on Tuesday. And then the leaders in that were materials, consumer discretionary, and real estate. So housing data straight giving us some information that kind of affects the market. Then on Wednesday, we saw a broad sell-off from a lot of different things. Just a CPI shock. And that kind of gave us the headline where inflation uptick was up to 4.2%, which is a nice little uptick. So on Thursday, we saw a sentiment rebound, and then the Middle East, the diplomatic progress update, which kind of, as I touched on at the beginning, was a big market driver this week. And then Friday, we got risk on tone boost from the largest ever IPO and AI enthusiasm. So that deals with a lot of SpaceX. That's the SpaceX talks right there. And then we got continued geopolitical headlines. I'm kind of supporting these things as we kind of see where all that's going to go over the next week or so. So
Yeah, absolutely. So, as you all saw on the screen on that chart, it was quite an up and down week, as we could see there. So Jeffrey mentioned inflation update. So that headline CPI got to 4.2%, and core CPI 2.9%. So the key takeaway was the inflation is still firm. It's not surprising us, but it's still sticking there, which hopefully that's given us a peek in the potential energy pressures that we're seeing, and hopefully this Strait of Hormuz gets opened. And finally, we had a little bit of market relief because of these elevated levels. So key economic data for this week. Monday, we've got industrial production, capacity utilization. Tuesday, import prices, housing starts, and building permits. Wednesday, retail sales, along with more housing data, business inventories, the FOMC rate decision. Thursday, weekly jobless claims, and Friday's Juneteenth, so markets will be closed on Friday. The only earnings we have reporting this week are Accenture. So again, we're towards the end of the quarter, so most everyone has already reported. And that will wrap up Markets in Motion this week, and we will be right back with Finance in Focus.
All right, and welcome back. And I kind of get it started in Finance in Focus and kind of give you an update of what's happening in the news this week as we dive deeper into things. So to start us off, we got AI semiconductors were big this week, as we kind of touched on in the weekly update. OpenAI is reportedly negotiating a 10 gigawatt data center lease in Ohio, potentially backed by NVIDIA, highlighting the sheer scale of next-gen AI compute demand. So that's big. Semiconductor demand surges as TSMC's revenue jumped from 30%, driven by robust demand from AI chips and advanced nodes. And that's reinforcing AI as a primary growth engine across tech. AI isn't going anywhere. Policy friction on AI innovation. Now, the White House has restricted a federal AI testing initiative on national security grounds, underscoring rising tension between innovation and regulation. And then as we kind of get into corporate developments, I talked about SpaceX earlier, so the IPO dynamics with them. It's a lot of anticipation of a strong index fund demand post listing that could create a self reinforcing rally, a feedback loop, amplifying price momentum. So you're going to, as I think we touched on that last week too, Marcus, we're going to see SpaceX and a lot of those index funds coming up. So
Mhm, mhm.
and then retail investor era is accelerating. Musk's ambition to leverage SpaceX towards trillionaire status underscores the growing influence of retail participation in mega IPOs. So that's been, like I said, AI semiconductors. Those are big things right now. So,
Yeah, so let's take a pause on that last comment you just made about the
hmm
retail investor. So generally, when you have these IPOs, it's mostly institutional investors buying, and
hmm
so it's sold and it's done. But what we're seeing now is a competition and a battle as people are trying to get the stock. And I was reading on CNBC yesterday that actually people aren't getting as much as they're ordering. So they may order 300 shares and only get 15.
hmm
So that's so now we got supply and demand is driving up the price. No fundamentals, just supply and
hmm
demand are driving up that price up. Really interesting. All right, so let's pivot to the markets and rates. We've got hawkish rate expectations. Bond traders are increasingly positioning themselves for multiple Fed rate hikes, indicating a shift towards higher and tighter monetary expectations. So, what does that do for the market? We're also seeing this where we're talking about is there diversification still exists? Earnings concentration remains extreme with a narrow set of companies, primarily AI linked, driving market performance. But you still need that diversification. It's increasingly a little bit more difficult to achieve, but also it's more critical because of these geopolitical risks on the rise, these policy paths are diverging, and market leadership is narrowing. So you still got to buffer that portfolio with something to get that diversification, control that risk. So, bottom line, geopolitical risk has sharply escalated, but markets are balancing this against optimism for the eventual de escalation. We'll see if that page and a half memorandum does it for us. I don't know that a page and a half can do that, but we'll see. AI continues to dominate capital flows, as we all know, driving both corporate strategy and infrastructure investment. And rates and inflation risk are reemerging, while market concentration raises vulnerability, reinforcing the importance, again, as we said, of that diversification. So that wraps up Finance in Focus, and we are looking forward to this Wealth Wisdom Workshop tips for managing an inheritance when planning your retirement. We'll be right back with that segment. Thank you.
Inflation doesn't shout. It doesn't crash the markets or dominate the headlines. But year after year, it quietly erodes the spending power of retirees, often cutting income in half over a typical retirement. At Friar Financial, we build dynamic retirement income strategies designed to protect your lifestyle from the silent threat of rising costs. Because your retirement shouldn't shrink as life gets more expensive.
Welcome back to the Wealth Wisdom Workshop. And so today's topic is one that's going to blend emotion and responsibility and some long term planning. And that's managing an inheritance when you're approaching retirement.
Yeah, of course, losing a loved one is always deeply emotional. So, and when that loss happens, right as you're preparing for retirement, you've got the paperwork, you got decisions and financial rules. They can all feel kind of overwhelming because it's a lot, and it's something we don't get to
Mhm,
practice. So, we've both been able to walk clients through this exact moment. I've lived this exact moment, so I
mhm,
well, not the retirement piece. I'm still working, but the other piece of kind of trying to handle that is it's a lot.
mhm. Yeah. And then, so whether your inheritance simply accelerates your retirement timeline or becomes the foundation of your financial future, thoughtful planning can help honor your loved one's gift and avoid costly mistakes, which is important at the end of the day. So,
Yeah. So today we're going to share some practical, compassionate strategies to help you move forward with clarity and confidence. And the first thing we'll talk about is going to be to how to address those immediate financial obligations. So how do they kind of attack those immediate things that we need to talk about?
hmm Yeah, so let's start with the essentials. The administrative steps that protect the assets coming your way. Even if an executor is handling part of the process, beneficiaries still need to understand what must happen. So here's what we want to prioritize. Confirm account access. Notify banks, brokerage firms, insurance companies. Some accounts need to be unlocked. Others must be frozen to prevent unauthorized activity. Excuse me. Then we want to settle those final bills. This includes funeral expenses, medical bills, and outstanding liabilities. Clearing these as early as we can. I know it's hard, but clearing these as early as we can will prevent fees, liens, or delays, which is important. So update or probate titles, real estate, vehicles, investment accounts must be transferred to your name or processed through probate. And then we want to establish short-term liquidity. Make sure your cash available for living expenses and upcoming taxes. Inheritance often comes with timing gaps, so liquidity keeps you stable. And then handling these items promptly not only protects the inheritance, but it also clears the path for long-term planning, which is always the goal. So.
Yeah, and it gives you a little bit of breathing room, during this emotional heavy time. So it's a lot going on.
Mhm.
Yep. All right. So step two, we're going to clarify inheritance tax requirements. So here's some things you need to think about from a tax perspective. Because these inheritance rules vary widely, and misunderstanding can be expensive, first research your state inheritance and estate taxes. That varies by state. So we know we have the federal estate tax laws, but the state's rules vary. Leverage that step up in basis. That's a big one. So if you don't understand step up in basis, basically there are certain assets, your real estate and taxable accounts, where the date of death valuation gets stepped up. And that can be huge for saving on those capital gains. File timely tax returns. Again, the IRS, that's their biggest thing in terms of making money these days, is penalties and interest. And then finally, understand your account specific tax treatment. Inherited traditional IRAs or 401ks are going to trigger significant taxes. So you got to time those when you want to pull those monies out. Maybe in lower income years, try and hold on to maybe you retire, you're in a lower bracket. So when you have to empty that money out in that 10-year rule, you can lower that tax bill. And of course, the inherited Roth IRAs are going to have tax free withdrawal. So again, in that
Mhm.
sequencing, probably put the Roth first, retire, and then start to pull out from the pre-tax. So a cohesive tax plan preserves more of your inheritance and prevents those surprises.
Mhm. And it ensures you're honoring the gift at the end of the day and not losing it to avoidable taxes, which is
Hmm.
what we're trying to avoid here. So, and then we kind of get into the next step, and it's emotional as much as it is practical. But give yourself a 30 to 60-day cooling off period before making major decisions. Like Mark said, this is an emotional time. So let yourself grieve, but it also works in your benefit financially too. So grief can cloud judgment. During this time, avoid buying a new home, reallocating your entire portfolio, making large gifts, making irreversible financial moves. That doesn't mean you do nothing. You can and should continue administrative tasks like transferring accounts into your name. But for big decisions, take a pause. And here's a powerful tool. Write a short memo explaining the rationale behind each major decision you're considering. This helps separate emotional impulses from thoughtful choices. So a structured pause kind of protects you from regret at the end of the day. And that's with anything in life. So.
Yeah, and it gives you, again, like Jeff just said, that space to kind of calm down and think clearly. So
Mhm.
finally, let's integrate those inherited assets into your retirement roadmap. So once all these immediate tasks and tax considerations are handled, it's time to fold that inheritance into your retirement plan. So here's how: update your cash flow analysis. So you've got new income streams, project those distributions, figure out what your RMDs are, and any new expenses or obligations you may have. Reassess your risk tolerance. And inheritance may shift your comfort zone. You may become more risky or less risky because you have these additional funds available. Optimize those retirement accounts. As we said, your inheritance may allow you to increase contributions if you're still working, make catch up contributions because now you've got this additional cash. Consider Roth conversions and strengthen your long term tax strategy. So, this is where your inheritance becomes part of your future.
And it's where thoughtful planning turns a difficult moment into long-term stability. So as we close, managing an inheritance on the eve of retirement requires balancing practical decisions with emotional resilience.
Yep. So whether this gift simply moves you closer to retirement or becomes the foundation of your financial future, planning with intention helps you honor your loved one and protect your own future.
hmm And a financial advisor can help navigate taxes, integrate assets, and build a retirement strategy that reflects your values and goals, which is important. So,
Yep. So again, thank you for joining us today. Take your time, take care of yourself, think through this, and take the steps necessary to report the retirement that you envision.
and until next time, stay grounded, stay thoughtful, and keep building wealth and wisdom. And that's always what we're trying to help encourage here with our podcast. So.
Absolutely. So thanks everyone. We'll see you next time.